Hey guys, it is Julie here with JT.Wealth. In today's video, we are taking a look at 3 growth stocks, all with some serious upside potential. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are taking a look at 3 different stocks that all have some pretty great upside potential. Now, 2 of those stocks were recently purchased by billionaire Israel Englander's Millennium Management Fund. And then the third one was chosen by yours truly. And each of these 3 funds actually happen to be a bit bio and health related. So we're going to take a look at all 3 of these companies and what their future outlooks are looking like. And just before we get into all of those companies, this is just your friendly reminder that if you enjoyed today's video, please make sure to give us a thumbs up and leave your thoughts down below in the comments. Also, if you like free stocks, make sure to check out some of the links down below in the description. Right now, Webull is giving away 4 free stocks just for signing up and funding a new investment account. You also might be wondering exactly who Israel Englander is, so we're going to take a quick look at his background, as he actually started trading stocks when he was back in high school and began his career interning at an investment firm Oppenheimer, later going on to purchase a seat on the American Stock Exchange where he would serve as a floor broker, trader, and specialist. Then in 1989, along with Ronald Shear, Englander founded hedge fund Millennium Management. As evidence of his stellar track record, the guru took $35 million that the fund was started with and turned it into over $40 billion in assets under management. With his personal net worth clocking in at about $7.2 billion, it's no wonder Wall Street pays attention when he makes a move. So these first 2 stocks that we are going to look at were brought to light from Millennium Management's most recent 13F filing, which shows which companies the fund snapped up in their 3rd quarter. And the first company we're going to take a look at today is G1 Therapeutics. They trade under the ticker GTHX, currently at $18.53 per share. They've had a nice little jump since their closing price on Friday, which was down in the $14 range. Now, G1 Therapeutics' mission is to discover, develop, and deliver next-generation therapies that improve the lives and outcomes of people living with cancer. So they work to develop different therapies that could potentially improve the lives of patients that are battling the deadly disease. And ahead of a key regulatory decision, the street is pounding the table on this name. Turning to the analyst community, Needham's Chad Messer tells clients that he has high hopes ahead of the February 15th PDUFA date for trilaciclib, its therapy designed to improve outcomes for cancer patients treated with chemotherapy. As a quick side note, that PDUFA date is basically the deadline that the FDA has to review new drug applications. Now, the therapy's NDA was accepted in August for priority review based on results from 3 randomized clinical studies in a small cell lung cancer, with the FDA indicating that it doesn't plan on holding an advisory committee meeting. As trilaciclib is the first CDK4X inhibitor to be used to treat chemo-induced bone marrow toxicity, Messer argues that the lack of an AdCom is meaningful. Expounding on this, he stated, "We believe this reflects the agency's appreciation of the unmet need, comfort with the safety profile of the CDK4/6 class, and efficacy profile of trilaciclib." Adding to the good news, GTHX and its partner are preparing for the commercial launch of trilaciclib, with the companies covering approximately 2,500 treating oncologists and providing educational materials regarding the use of trilaciclib ahead of treatment and the benefits of multilineage preservation. With a data readout slated for Q2 of 2021, analyst Messer believes a positive readout could prove to be a significant value driver. In line with his optimistic approach, he has reiterated a buy rating and a $74 price target. Now, there are 3 analysts that currently have ratings out on G1 Therapeutics, and all 3 have it rated as a buy, with an average price target coming in at $59, which represents about a 220% upside. Englander's Millennium Management picked up about 555,000 shares of GTXH in the 3rd quarter for a total value of around $6.4 million. Now, the second company that we are looking at today is EPZM Inc. They trade under the ticker EPZM and are currently at $13.60 per share. This company also focuses on the treatment of cancer and other serious diseases, but through epigenetic medicines. Now, sales of their latest drug were a bit lower than expected, but that was largely due to the pandemic. Wedbush 5-star analyst David Nierengarten points out that the pandemic limited oncologist visits. The pandemic shifts the launch curve to an incidence model rather than a prevalence model, as there is a limited patient pool to draw from if they're delaying office visits, with patients waiting to seek treatment until they're experiencing symptoms of progression. Additionally, although the launch is virtual and physician awareness is high, physicians are opposed to prescribing a new medication without examining a patient in person. That being said, Nierengarten remains optimistic about the therapy. He explains that despite these headwinds, Tazverik came close to meeting our estimates, and it is gaining market share, including seeing initial sales in second line. We expect more meaningful second line sales to begin in 2021 and have more gradually incorporated them into our launch curve. Furthermore, the headwind against switching therapies turns into a tailwind of Tazverik maintenance once a patient is on therapy. This will likely contribute more meaningfully to their second half 2021 revenues and potential revenue outperformance. Summing it all up, Nierengarten commented, "At current levels, we believe investors are too negative on Tazverik's potential and patients should be rewarded." So he rates the stock a buy and has a $27 price target. And there are 3 other analysts with price targets on this company as well. In total, there are 3 buy ratings and 1 hold rating. The average price target comes in at $23.25 per share, representing just shy of a 92% potential upside. Now, Millennium purchased about 460,000 shares of EPZM for a total investment about $5.5 million. Now, third on our list today is not one of Billionaire Israel Englander's pick, but one of my picks that I think might have some great potential, and that is Karyopharm Therapeuticals. They trade under the ticker KPTI, currently sitting at $16.20 per share. And yes, there is a bit of a theme developing here, as this company also is involved with the treatment of cancer. Karyopharm Therapeuticals is an innovation-driven pharmaceutical company focused on the discovery, development, and commercialization of medicines with the goal of improving the lives of patients with cancer and other major diseases. At a quick glance, they bring over 10 years of advancing research and development in cancer therapeutics and nuclear export dysregulation. They have 1 product now approved by the FDA and commercially available in the US, and 4 unique drug candidates in clinical development. Their management team has extensive experience developing and commercializing cancer therapies, and they're headquartered in Massachusetts with presence in both Germany and Israel. Of those drugs in their pipeline, there are several that are well into their phase 3 trials and are expected to have results later on in 2021. Currently, there are 4 analysts that have ratings on the KPTI stock, and all 4 have the stock rated as a buy. Now, the average price target comes in at $31.25 per share, representing about a 93% upside. On the high end, we have a price target of $41 per share. So there we have 3 very interesting biotherapeutic companies, all with relations to different cancer treatments and all with some pretty significant upside. Now, keep in mind that any bio company always comes with a good deal of risk. These videos are never a suggestion to buy or sell any specific stock, and any trade should always be done after your own due diligence and research. Now, you know, I always love hearing from you guys, so please leave your thoughts down below in the comments. What do you think of these 3 bio stocks, and are there any others in the industry that you have your eye on? If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful Monday, and cheers.